Yo, what up, what up, what up? What's going on in the hood? How's everybody doing? Heck yeah. Heck yeah. Dudes, hold on here 1 second. I'm just getting Paul in here. What is up, people? Dang, it's bright as motherfucker out here. All right. Dude, what's going on, people? How's everybody doing? Hey, happy Tuesday, Casey. What up, baby? Cool. I'm just, hold on, waiting on Paul. I sent him the wrong link. Hey, Miss Wanda?
Yeah.
Hey, will you send me, there is a thing. Hold on here. There's a cube, white cube light thing that looks like this. I don't know where the other one is.
What's it look like?
I found it.
Yeah, you got you.
Will you warm up my coffee too? I got it right here.
Okay. The light was blind to me.
No. It's all good. Thank you. All right. What's up, everybody? How you doing? All right, let's get Big City Paul up on here. Then we're gonna get to work. How's everybody's day? Tesla earnings are out. Let's just take a look while we wait for Big City Paul. Yeah, let's take a look here. See what we got. Oh, there he is. Hold on. Hey, Paul, how you doing?
Hey, Kanal, what's going on?
What's going on in the hood? How you doing, brother?
I'm doing good. I got a few minutes here getting ready for my fantasy football draft this evening.
Nice.
So doing stocks research, doing fantasy football research.
Oh, here we go. Tesla earnings are out. Actually, just judging by the way the stock has been acting, figure to gap up, but you never know. Looks like earnings are out. Let's see what we got here. You're not really giving back. You're giving back like a day's worth of gains so far.
Yeah, it's not really moving much right now.
No, not at all. New vehicle approach will result in achieving less cost reduction, blah, blah, blah. Yeah, not too much action yet. You know what, guys? If for stock to, open down like a point or two or three, is not really much of anything. So I wouldn't really even read too much into this so far. Let's see here.
Oh, interesting. Earnings per share, 52 cents versus 62 cents expected. So that wasn't good.
No.
Revenue's up a little bit. So at least the numbers are mixed. We'll see how price action reacts. That's probably why it's down a little bit right now.
Yeah, you see here, guys, right? You got EPS 52, expecting 60. Actual revenue 25.5, expecting 2.5. Not too much action. So you got a small miss on this. Tesla misses like pretty much all the time anyways.
Yeah. I mean, it actually missed the numbers big time last quarter, but they announced the new car, remember? So
yeah, the new cars that never come.
Yeah, right. So it popped because of that. And we'll see what happens. I don't know if they've made any announcements yet.
No, they'll probably get on their conference call soon enough. And then it looks like, guys, we got here Google, right? EPS 189, expecting 185. They're up slightly. And then, revenues are pretty much exactly in line. So let's take a look at the Google here. And this one's a little bit, it's just a little bit of a flat ender at this point. And you know what? This is kind of an interesting thing we'll see if this picks up any steam. But we saw this with really Netflix. You wouldn't even know that Netflix really had earnings. Like, yeah, there was like a little wick up here, but right, there wasn't any, if you're looking at just the daily chart, there wasn't really any gap or anything. It spiked up for a second, kind of reversed around and farted up. And in the end, it's kind of at the same exact price as it was right before the earnings, and so we're getting a little bit more muted reactions this season. I haven't seen very many hot earnings breakouts at all so far, and we're just starting earnings season, but we are getting a lot more muted reaction to just a whole host of things. So that'll be something to keep mind of.
An interesting one was Netflix, the first of the big, big tech social media companies. When it reported, I don't know if you're seeing my screen here, but you can see here reported last week. I think it was Friday, but it was up. Part of why we can't really base a lot on this after hours kind of action, because you never know what's going to happen by the open, right?
Sure.
And Netflix here. Am I sharing my screen?
No, you got to just press the share button on the bottom and then it'll do it.
All right. Well, Netflix had actually popped big. There is it sharing now?
Hold on here 1 second, boys and girls. Oh, there it is. I just got to enable it now. You're good.
All right. So anyway, Netflix had great earnings, huge subscriber growth. And in the morning, it was up 5%. If you can see this.
Paul, and we're on like some TC 2000 homepage thing.
Oh, you're not seeing my TC 2000?
We're seeing the TC homepage.
All right. I got it. New technology always gets me. Hold on here. Okay, I can just do the entire screen right there. Let's just do it this way. All right. Seeing it now?
Yeah, I got you.
Okay, there we go. This is a great example of really waiting to see how price action plays out, especially for us swing traders, since we're going to focus on swing today. With the day trading, you can do whatever your setups tell you in the morning, right? But swing, you really have to be patient and wait. Netflix, great revenues, great earnings, great subscriber growth, was up 5%. And by the close had put in this big, ugly candle with no real news. And then you can see where it's been since. So kind of a really good example of we get excited after hours, like right now with Tesla and Google, but there's really, until tomorrow's not even open, but really for us swing traders, tomorrow's close, we really don't have a good indication of what we want to be doing with it yet.
Yeah, and this is, if we're looking at, guys, if we're thinking about the cycle of markets and what we need to see, if you're really looking at like where we are in the daily charts of some of these like bigger, players, they've been going up for 2 straight years or 1.5 years. And so you can have, small earnings beats or even earnings beats, and you may get muted reactions just because of, the wave of the move that we're in and how far you are from the base. One of the things that Paul was talking about in the first Trader's Edge is, always look and see how far a stock is away from its 200-day moving average and whenever they tested it last. And you'll get an idea of really, how extended it is. And so when you see stocks like, Google that have been just going up, for months and months up so far from their 200-day moving averages, or even right, Netflix is up still 100 points over its 200-day moving average, then you have, right, something that's just real long in the tooth. This thing was $165 just a year and some change ago. It doesn't mean that the trend is over, but that, the trend is tired most likely. And so you can have a huge earnings beat and still like not get any of that sweet, that sweet juice because you're just so late in the cycle. Now, it doesn't mean the bull market gets over, but what often will happen is, right, Paul was talking about this the other day, which is, you rotate into some new leaders. And, hopefully that's what we see in this earnings cycle, right? It'd be nice to get a new SMCI or whatever, right? Some new hot thing that you could trade for a few months. What are you thinking, Paul?
Specific to, we were talking about big tech. We've got a lot of big tech earnings this week and next week. one of the things I really want to see, we'll see if it happens, is some of these big techs that have been really flying, get some stocks that maybe overreact to earnings a little bit and gap down. And
Sure.
those will be good potential entry points. So, for example, I mean, we had Netflix up. We were looking at this earnings for Netflix. I don't know if you can pull it up there rather than just flipping to me. Just pull up Netflix and take a look at that April gap down. That is one of, and I'm pretty sure we traded this in the swing report, but this is one of my favorite setups here, where you get one of these stocks, a popular stock, a stock that has been in a great trend that gaps down. And usually these huge gap downs are overreactions to something. You know, they miss earnings by a few cents. They miss revenues by a few cents. Really, in the grand scheme of things, it doesn't mean much. But in that moment, you get this overreaction. Now, I would never just blindly enter based on that overreaction. But if you start to see the stock stabilize and not really follow through to the downside much, that's usually a good signal. You know, we were watching this here, and once it pulled into the gap, that was essentially our potential entry. We had Meta. If you pull up Meta, almost the exact same thing last quarter, where it gapped down and then it flew after the gap down.
Yeah,
so,
it just lasted one day.
Yeah. So when you get these stocks that have been in momentum and they break out to the upside, that's almost, I wouldn't say the worst thing that could happen, but it becomes a tough trade because they're already so extended at that point. But when you get these stocks that are really good stocks that gap down, and it doesn't have to just be the big techs, but even, you know, the mid caps, the low floaters, some of these guys that have been doing well, it gives them a little breather. And if they bounce back quickly, we get really good trades out of those. Now, compare that to something like if you pull up UPS today. UPS, so what we're looking for with these is stocks that have been momentum stocks. And we're identifying those. If they gap down and they recover very quickly, we want to enter them. UPS is the opposite. So don't just go for every gap down you see. UPS has been an ugly stock for a while. So this gap down just confirms what it's been doing. So maybe with something like this, I would actually look to potentially short it. But those really strong momentum stocks, these gap downs can be really good opportunities. And we'll see what happens with Tesla and Google tomorrow. I'm not sure how Google's reacting right now, but I think the key for Google today is going to be their numbers seem to be kind of in line right now, but in their guidance, what they talk about AI. With Google, with Microsoft, with Apple, those things are moving not on numbers, but on AI news. So if the AI news...
Do you think that is also, like, if you remember like 3-4 quarters ago, you know, if a company just said the word AI in their earnings report, right, they just launched like 10%.
Yeah, I mean, it's still like that. It's still like that. Apple, just a few weeks ago, right? They had the Apple was lagging all of the other big techs. Then they come out with this AI news, and it wasn't even really big news, really, just that they were, I think it was they were going to use ChatGPT while they're developing their own AI. It had its biggest 2-day run. I think it was in the last 4 or 5 years. Without any real big AI news, but just mentioning that has the stock popping, and it's back leading big tech right now. So I would keep watching for that. The stocks that are leading in terms of the AI news, it doesn't even really matter how developed they are, what their numbers are. Just the fact that they're developing stuff, they're talking about it, that's going to set the trends for us to trade.
Nice. So Paul, what are you, give me an idea. So it feels like maybe, that's right, tape. It feels like maybe some of these large caps are a little bit tired, right? Like
they are.
I mean, if you're just looking at the price action, but also, right, they're just tired. Like the pops are fading off even today. And look, if you didn't know, for example, if we just played a game, right, and we took these watermarks out of TC 2000, and you didn't know the ticker and you saw this, you would say, I think that this is a topping pattern of some matter, right? If you didn't know that it was NU in a semiconductor company, right? If you looked at Dell Computers and you saw this, you would say it's kind of a longer topping out pattern or consolidation pattern, however you want to call it, right? You know, if you were really squinting your eyes, you could even say, right, it's kind of a little bit of even a head and shoulders. So a lot of these things have been slightly played out for some time. Actually, it's been months already.
Yeah, we called it in we did the first Trader's Edge here. What was that, like 3-4 weeks ago now?
Yeah.
And we were talking about it at that time. And even before that, in our swing chat room, about a month or two before that, we were talking about it, that we could see the subtle signs. And this kind of leads to, us talking today about, swing trading traits. What are some good traits for a swing trader? And one of the big things is understanding that money flow. There's a finite amount of money. Where is it flowing? Where is it coming in? Where is it coming out? And even before it happens, usually you get these subtle clues. And we were starting to see that in big tech. And we were kind of shifting away from that big tech trade towards some of these other areas that don't sound as sexy, but they're moving really nicely, like industrials. We're actually in DUSL right now, which is the leveraged industrials ETF. And that's been moving like a tech stock, essentially, and now looks ready for that next run in that stock after it's been consolidating for a while. It's starting to show signs potentially popping. As big tech had been leading, money had flown out of the smaller tech, and now the smaller tech or biotechs, kind of specialty tech, low flow techs, those are starting to move. If you pull up LABU, you can see that big breakout pullback in LABU right now, and that's setting up for a really good trade. So it is important. One of the for a swing trader is to be able to identify these shifts. And you mentioned it. We're all focusing now, on big tech because everyone's watching them. They kind of set the market. This week, next week, they're all going to be reporting. But over the next month and a half, just about everyone is reporting, and there are going to be days where we get 300-400 stocks reporting. And that's really where a lot of the opportunity generally is, especially right now when we're seeing a shift out of big tech. And, if you pull up IWM, we can see that small caps are popping, while the Qs and while SPY is taking a little bit of a breather, we're seeing a big pop in small caps. I think that lends itself really well this earnings season to keeping an eye at these small and mid cap earnings for potential breakouts and trades.
Nice. So beyond Dussel, what are you looking to get into? So we've got IWM breaking out. We got the IBB, which I think is the right underlying for Labu. If you look here, guys, this is I'll go to a weekly so you can see a little bit better. This is a multi-year since 2022. 2.5-year breakout here on the IBB. This is your largest biotech ETF. And so you've broken, and now you're consolidating over this. And so like on the daily chart, you can see how it's just hugging the 90 just like Labu. So there is a shift happening. And so what we may see, and I suspect we see, just based on the way the charts are and also the intraday action, where you're getting strength fade off like quite a bit. Like, you see something like an AMD, which is sitting on the 200-day moving average, but like every time it pops, it just fades off. And so there's a certain level of maybe distribution that's happening in some of these names. We saw, right? Dell's been distributing for a couple months now, right? Since its earnings, and MU is distributing, right? These were the darlings, right? So we're getting a shift in these names, and they're all getting sold off. I mean, this thing pops up every day and it just fades off, right? And so there's a sellers in this one, and that can go on for some time. And so now there needs to be, right, that shift. And so, your, as swing trader, day trader, whoever, right, your goal over this next, coming weeks when you're doing homework is to find where the new money's going, right? What are people buying, And so you can do a top-down analysis on the indices. You can also be hunting for the newest earnings breakouts, right? Is there any new leaders out there? Is there, right, a new Kava or something like that, right? Some new stock that's, going to be, that's more of a mid cap that starts trending. There'll be something like this every earnings season that picks up, that starts up. And, they all start with some level of PR out there. Paul, what else?
Yeah, let me just really quickly here, lending itself to that. I took the industry indexes in TC2000, sorted them by the last 5 days, and these are the areas that are moving: tobacco, residential construction, business equipment, oil and gas, food distribution. So, we're always looking at tech, but there are a lot of other areas where there's opportunity. The areas I really like right now are retail. And we talked about this last time, that we have that catalyst with inflation numbers starting to look better, which leads us to believe that there's going to be a rate cut. And if that happens, a lot of these other areas are really going to start to pop. Anything related to consumer discretionary. So retail. And we're already seeing that. In anticipation of this, we've been seeing a lot of retail stocks starting to pop. Auto has been starting to pop.
So Paul, whip out, like, okay, so say you like retail. You're if you're on your T, I see your T.
Yeah.
So you look up X. You're looking and you say,
let's go to XRT.
Okay, and so you see this break. How do you find from there a retail stock? So what do you do? XRT looks good. Okay, what's the next step?
So the easiest thing to do, obviously we do kind of a deeper analysis, but if you just want a quick idea of some of the retail stocks that you could potentially trade, pull up something like a retail ETF like XRT, sort it by like I just did with these indexes over the last 5 or 30 days. I'll just really quickly sort these by the last 2 weeks, let's say, and we've got right now the number one retail stock, and you're already going to get a good list here. So ANF here is leading the pack, and I think we talked about this the last time we got together, and you can see here very strong. So I would go towards the relative strength leaders. Here's DDS has been a relative strength leader and has pulled back, giving us a good opportunity. So if you're using TC2000 or whatever you're using, take that industry, look at the relative strength leaders, and right away you're going to get a good list of stocks to potentially trade.
Good. Beyond XRT, what else are you looking at? Give us a couple little.
All right. So we all know about CrowdStrike on Friday, right?
Yep.
So if we look at CrowdStrike, obviously the big, huge gap down. Probably not something you want to trade right now when it's got this type of news. But the first thing I did when this news came out was, how are the other cybersecurity stocks reacting? And there are two ways it could go, right? One is everyone panics about cybersecurity in general, and everything starts crashing in cybersecurity. Or it's looked at as a one company event, and the other ones start to show relative strength, and money that was maybe going to go towards CrowdStrike starts going to these other places. And that's what looks like has been happening right now. So I'm watching some of the other cybersecurity stocks very closely. So we've got a list of them here. Here's PenW, cybersecurity stock. And if you look at this stock, you'd never know that one of the leaders in cybersecurity was gapping down that big or had this huge news event, right? So I think this is very strong for PenW. So this is a stock I'm watching very closely. We haven't traded it yet. We've been talking about it almost every day. We're just waiting for the setup. So we can have this thesis and we can have this idea that a stock is going to do well, but then we have to trade our setups. And here I'm essentially looking for a break of this high. So we've got this range here around 345 and the stock's at 335. If it breaks that 345 level, it'll be almost automatic that we'll get in. It does have earnings on the 16th. Maybe that'll be the catalyst to get it up over that range, but I'm hoping it can get over that range before earnings. Another one, S, same thing. You can see here, this actually was not doing that great before. It was under the 200-day moving average, but since that CrowdStrike news, this thing has really popped. And it's actually a decent entry where it is right now, above the 200-day moving average. We don't have earnings until the end of the month, and we've got a high here around 30 and it's sitting around 24 right now. A couple others, ZS here. I'm watching for this one to get up over the 200-day moving average. It's held up very well. Of course, this Cyber, CYBR. This one looks like a good breakout pullback play. We were talking about this one today. If it could close above the 9 EMA as a breakout pullback play, but didn't end up closing above that level. But I think we've got the catalyst now with CrowdStrike that some of these cybersecurity stocks are really in play. for potential trades.
Hey, Paul, something like a cyber. Now, what is your threshold on volume on some of these? I know some of these things like cyber for.
Yeah, I've always used 200, an average of around 200,000 on the daily volume.
Sure.
I've found 200, if it's above 200,000, it's liquid enough to trade. And I keep this line here, if you can see here on the chart, the 50-day moving average, and this one's around 500,000. So about 500,000 shares are traded a day. That's enough.
Nice. Hey, Paul, let me ask you this. Like, so do you think, I get this question a lot, people always jump into, oh man, this Tesla's already bouncing. People always jump in like to whatever they learn first, right? So it's like whatever is like the hot thing. So like if you're a new trader, it seems like everybody these days, right now, just they want to get into like options, right? Or they want to get into like futures, like basically they want to just take whatever they can trade with the littlest amount of money with the most leverage for the most part.
Yeah.
One thing I tell people is like if you can't swing trade, you probably can't day trade. And if you can't day trade equities, you probably can't do options. And you probably can't do futures. Like, if you can't read charts on the big picture, like how are you supposed to read them on a minute by minute basis? Like, do you think it's necessary to be good at swing trading to even be able to even try some of these things? Because I think one of the things that made me a good day trader was starting as a swing trader first, because I now understand trends.
Understanding trends, and it's really amazing that a lot of the day trading setups you trade and swing trading setups you trade are actually the exact same thing. They're just on different time frames, right? I mean, I'm looking at Google right now. In May, there was the breakout pullback. We're looking at daily candles. If that was an intraday chart, we'd be doing the same thing, trading it almost the exact same way.
Sure.
So in that sense, that pattern recognition, understanding the charts, I think swing trading, having a base in swing trading is really valuable. Obviously, there's other things with swing trading that I don't know, you have to understand as much with day trading in terms of this kind of holistic approach, understanding all these, what's happening in all these different industries, where the money's flowing. I don't know if that's as important in day trading as swing, but definitely there are some core concepts that transfer over, especially in that pattern recognition and understanding setups and charts.
Nice. So guys, remember this, like if you're jumping into any of this, if you've got $10,000, for example, right? The best way to grow your account is to actually learn how to swing trade 100 shares of stuff or 50 shares of stuff. The worst thing you can do is throw it in a futures account or an options account and go for gold, because in the end, I mean, it could be just one or two trades and your account is gone, and the P&L just moves almost too fast. Till you get used to even learning how to make like $100, it's really pointless to try anything else. And so like when something's moving, the faster something moves, the more likely you're going to make a mistake, and a big one. I myself, even at this stage, stay away from a lot of stocks now. I have a ban list of hundreds, because they frankly, when the faster sometimes things move, the stupider I get. And, a lot of times people say experience makes you, wiser and all this kind of stuff. That ain't true. I mean, I feel a lot more stupid some days now that I'm 43 than I did at 33. I don't feel any wiser. My ban list is huge. And even Paul, if you notice the stocks that he trades, they're vastly different than what he would have done even 10 years ago. And so, don't be in too much of a hurry to go and get into the leverage game. The leverage game is fun, but it's a nasty game. Your success ratio goes from maybe as a swing trader, almost every, you're never going to blow up your account trading like large cap swing trades, most likely. I mean, if you're doing 1% risk, you'd have to lose 100 times in a row, maybe 90 after slippage or whatever. So it would take a lot, so just kind of be mindful. There's a way to grow. You should always give yourself the chance. You should always ask yourself, like, what's the way that I'm going to be in this game, long term? Like, how do I give myself the best shot to survive long term 5 years from now? And that's probably not like your first 10 grand, 15 grand, 20 grand, like rolling deep into 0 DTEs or, any kind of leveraged instrument. Paul, what would you, if you were starting somebody brand new, like, what would you do? Somebody who doesn't know anything about stocks beyond watching CNBC. What's the game plan?
What would I do in terms of what type of strategy to trade?
If somebody's just brand new, say you got a nephew, right? And you actually like him. He says, hey, I want to, get into stock market. I don't know much. I just took a couple college classes on economics and I watched CNBC. Where do I start?
Well, so I did teach my daughter how to trade. So I actually have a little background in trading, in teaching someone from scratch. And the first thing I did with her was watch the indexes every day, get an idea of what the overall market is doing. And then I would have her take the charts from those indexes and just start studying them. And that's kind of what we did too. It was like study chart after chart after chart, right? So, for example, if you pull up on TC2000 here, and you can do this on most platforms, is my screen's being shared now, right?
Yeah.
Okay. So if we pull up TC2000 here, we can see SPY, and just start, get a basket of setups, a few setups to trade, and generally the easiest setups, kind of continuation patterns, pullback plays, breakouts of highs, have those down. And then just start looking at the charts and trying to figure out what you're seeing. So you can look at SPY here, and then I would, right here, you can pull up all the stocks that make up SPY and just start flipping through these charts and start noticing, what do you see here? Where do these stocks tend to pull back to? And you'll start noticing here, there are key levels that these stocks almost always pull back to. It's very clear right here. What is this? PNR here. Pulled right back to the 200-day moving average. And that's a spot we always look at, these moving averages, right? Or you start to notice, okay, they violate these really quick, but if they remount it after a violation like this, we often get good trades, and it came right at the high. Start noticing that, wow, when they test a high, oftentimes they pull back the first time. They don't really break out. And then once you've had that test and you get that breakout, oftentimes they'll start to run. And that looks like what's happening with PNR right now. So essentially, just start looking at charts and have a few setups, and start getting that recognition down. After you have that, and you were talking about a slow process, we're not even trading it, right? You're doing this for however long, a few weeks, a month, however long it is, just getting an understanding of this. Once you have that understanding, then start putting on trades and start, what I taught her after she had the pattern recognition down was, now you understand these setups. Now let's start talking about risk. And, risk is probably more important than the actual trades or setups you put on, is understanding risk. When you have a certain account size or you have a trade on, always understand how much you're risking versus how much your reward is. And a lot of traders just go in and they just don't even think about their position size, right? They're trying to hit the lottery and take these big position sizes, and then that's how they crush their accounts. So I think the first step before actually putting on a trade is actually understanding risk. And then once you have those things down, those are really the major factors. Then it's just fine tuning and just learning and understanding more.
Nice. So, okay, you've got all this stuff down. You want to put real money to work. When do you know? How do you know? When do you know it's time?
I think it can be kind of tough. I would never start with the size that I expect to potentially start trading with. So you can start paper trading, trade small. With swing especially, I think with day trading, you can do this pretty quickly because you go through so many different cycles as a day trader. just trading for a month. With swing, those same cycles take time, and you need to really understand how good you are as a trader. You have to trade various markets, right? So first, when you're studying your patterns, go back like 2-3 years on the chart and look at all these different markets that you've seen and see how price reacts to that. Start putting on some paper trades to see how you're doing and understanding the current market. But I think you have to, at some point, you just have to experience it, right? And you have to actually trade through these different markets. So in the beginning, I would say trade very small. Paper trade a little bit. Then when you start trading, paper trade really small to the point where it doesn't matter to you at all, right? So maybe that could be putting, risking $5 on a trade.
Okay.
So if you lose, you just think, okay, I just lost a big deal, right? It doesn't mean anything to me. What you don't want to do is like, say you're going to, when you actually start trading properly, maybe you're going to risk $500 a trade. If you start at that point and you're thinking about the money and the P&L, you're probably not going to trade as well. You're going to micromanage your positions. You're going to take these small profits when you really want to let that thing ride out, and all these mental game factors come in. So what I always say is start with like $5 or $10 of risk. Maybe do that for a month, and once you see, okay, I'm profitable, I'm doing this well, then incrementally start upping it. Okay, I risked $10. Now let me try maybe $50.
Sure.
And that goes well. Now let me try $100 until I get to that point of where I want to be as a trader.
And so do you have like a set, like, do you think there's a minimum like account size you need, or, whatever you can start with, you just got to do it?
I think it depends on what your time frame is. If you want to start making a lot of money very quickly, you need a bigger account size, right? But if you're willing to grind it out, and you can start with $5,000 or $10,000, right? And just grind it out. Know that it's going to take some time, but yeah, if you need to start making a lot of money quickly, you do have to have a bigger account size.
Guys, there's something to be said too about grinding it out and growing your account versus just dropping 50 grand or 100 grand. I've seen people do the stupidest shit. I'm never surprised by us Americans. We are wild motherfuckers. I mean, I've seen people be like, hey, I'm cashing out my 401k. I'm going to start day trading after I take your class. I'm like, whoa. And, people never listen, right? But hey, man, I'm taking second mortgage. Hey, man, I'm going to take a HELOC. I'm going to start day trading these options. It's like, whoa. Like, because everybody wants to make money and they want to do it very, very quickly, before they've really earned the right. Trading is a privilege, right? Just because you drop some money in an account doesn't mean anything. There's still a little bit of a rite of passage that goes in. So there's something to be said about taking 5 grand, 10 grand, and grinding it out. I risk 50 to make 100. I risk 50 to make 200. I risk 100 to make 150, and doing that just over the course of 1,000 damn trades. Just that proper way. You are so less likely to blow up your account if you do that, because when you get that thing from 5 to 30 or 40 or 50, man, you fought for it like every inch of the way. I mean, the odds of you YOLOing it and really blowing it up, and I've seen people blow up millions of dollars like in months sometimes on tilt. You just like the odds of you doing it are much smaller, because you earned that.
And as you grind it out, you're getting better. So as account size grows, you're a better trader. And also as it grows, you're risking more. So what you were risking $50 before, now maybe you're risking $100. And then when it grows, you get to slowly risk more, and you can make more as it grows. So I think that's a really good way to do it. And then, let's say you start with 10,000. Nothing's saying, if you've got the money, you can't add more later. Once you're a better trader and can be disciplined, follow your rules. One of the things I look for with any trader is how do they react during drawdowns? You mentioned on tilt, these guys with big accounts who go on tilt, even small accounts, there's this tendency to want to get it back, and they start breaking all their rules once they've lost a few trades. And any trader is going to go through drawdowns, and that's what I would really identify. If you can trade through those levels and keep grinding, you're probably going to be successful and you can start adding to your account.
Paul, what's your slump buster?
What do you mean by slump buster?
You're in a trading slump. Maybe losing. I mean, for day traders, it's very different than swing traders, because for a swing trader being a slump, I mean, sometimes when you're in a slump, you're really not even taking that many trades. In day trading, in like 2 days if you're in a slump, because you take 20 trades a day for 2 days and you get smoked on them all. You're like, fuck, that's a slump, right?
The nice thing with a day trader, though, is you go through that slump and it only those 10 trades last like 2 days, right?
Your cycles change very fast.
With swing trading, that slump, that's 10 trades, can last a longer period of time because you're not putting on as many trades.
Yep.
One of the things I do always is I review the trades that I made. Let's say, the last 10 trades, I lost 7 of them. Mm-hmm. I would review those trades, and the first thing I ask myself is, should I have been making these trades? And if the answer is yes, then I don't really worry about it. I just keep doing what I'm doing. If I say no, I shouldn't have been putting on these trades, then I pretty much start over with my analysis, in the sense that we've got, as swing traders, not a lot changes day to day. So we've got this kind of outlook on the market. We're talking right now about rotation in the industrials and so on. If I've lost 7 out of 10 trades, I'm going to think back and say, okay, is my analysis correct? Maybe I should be looking at other places. So it's kind of identifying mistakes, but outside of that, I try not to do too much different. And a lot of times all it is just these setups don't have 100% win probabilities, right? If you've got a setup that you expect to win 7 out of 10 times, you're going to lose 3 out of 10, and it doesn't go perfectly. Like you 7 out of 7, you win 7, you lose 3. Sometimes you lose a few more. So it's kind of understanding the process, knowing that some of these trades are going to lose, and then identifying, am I trading well and I'm just on the wrong side of probabilities, or am I trading poorly and I have to make some changes?
Nice. Do you got like a slump buster setup? Like in life, sometimes you go in slumps, and everybody's got like a old slump buster. I mean, I'm a married man now, but like I had a friend that was like a slump buster. Not that good looking, but bust that slump.
One of my favorite setups, and this can be risky in a slump because it doesn't always win, but when you win, you'll win big. It is when stocks are beaten down. We've talked about rubber band setups for years. I know that was one of your favorite setups for a while, but I might put on a little. What I like to do is setups where I can risk a little to potentially make a lot. So let's say I've been risking, I don't know, $1,000 per trade. If I can now, I'm in a slump, I want to downsize my positions, but still have potential to hit big. Rubber band setups are good for that. So where I've been risking $1,000 per trade, maybe I can only risk 200 or 300 here. But if I hit it, because when these things bounce, they can really, they can do really well. So I can risk a little. If I'm in a slump, I'm still losing very little, but when I hit, I can hit really big. I also love when earnings season comes around, because you just have so many stocks that are moving. Those can help you out a lot too.
Nice. For me, guys, what I try to do for slump busting, I think slump busting, by the way, is one of the most important things you can do as a trader. Because in general, it's periods of drawdown where you are in danger. Like, you are not in danger like when the market's easy. Even if you're not trading efficiently, the market can often bail you out. Like right now, like for example, the beginning of the year, if you were trading semiconductor stocks, even if you were trading them very shittily, you were probably making some money, right? You were like, I'm buying NVIDIA, I'm buying MU. Hey, I'm doing this, I'm doing AMD, whatever, right? It can mask a lot of poor trading decisions and behavior because of the strength of the trend, the ease of the market. There are markets that are just infinitely easier than others, but that all is hiding something. What happens is when markets shift, all of a sudden, you have to be more precise, you have to be more efficient, more planned, all of it, and things stop working. And that's when you are at danger. When you have periods of drawdown where you are in a slump and you are not able to get yourself out quickly, that right there is the precipice of whether you survive as a trader or not, or that specific account or not. And it can unravel very quickly in a matter of days. You know, even if you see, even with big hedge funds, right? When they blow up, it's not they blew up over the course of 7 years with small losses and risk management. It's always something unravels in a period of days, right? Those guys at GameStop, that Asian guy, right? He blew up $30 billion trading that hedge fund out of Hong Kong, right? A couple years ago on Viacom and CBS and right, these kind of things. It happened in like 2 days. And for you guys, so think about those people have billions of dollars and they blow it up in a handful of days. So imagine what can happen with, you know, you guys in a week or two. And so having some way to identify slumps and then bust them is one of the most important things you can do. For me, what I'm trying to do is what I do is like, okay, if I'm risking $1,000 per trade, and this is for day trading, and I lose 2 days in a row, I move it to 500. And this is a hypothetical. Some days I might risk more or less, depending on the market conditions. Next day, if I lose again, I'm going to 250. All right. Next day I lose again, I'm going to 125. Right. And I keep reducing it, you know, at some point. Then once I start winning again, right, I stair step it back to, you know, where I need to be. I don't go right back. I stair step it back. Like I won a day. Okay. You know, go to the next level, win again, go to the next level, win again, go to the next level. And then I try to do specifically, you know, easy setups. So for me, and I think in general for most people, trend trading setups are the easiest setups, right? Hey, I'm trading a pullback in the trend, right? So for day trading, that'd be like, okay, a stock spikes up in the morning and pulls back to the 9 EMA or 20 EMA. It starts to hold, or maybe a gap fill, and then right, it ramps back. You know, something just very, very simple is usually the best, you know, I think the best kind of setup. So when you think about like, you know, what's an easy pullback setup, you know, it'd be something very similar to like, you know, if you were looking at like, say this AVGO or something like that, you know, today, right, where you have, okay, you know, stock spikes up, right, and then it just pulls back into the 9 EMA, it holds, and then it goes, right? So that's just like, that's the most simple setup you can do. And it's also very effective on momentum stocks, you know, so on and so forth. So what you want to do is really narrow it down into something very, very easy. And if you can do that, then you're going to be able to get out of the slump very quickly. And that's my easy setup. Everybody else has different. Some people could trade flag patterns. Some people could trade, you know, bounces, reversals, exhaustions. I mean, there's really only a handful of type of setups you can do, right? Trading trends, trading exhaustions, or some level of range trading, which is probably the toughest, I would say, you know. And so trend trading, pullback, first pullback, I think is like, for me, that's the easiest one. But this will define you. And over 5,000 students that have come through our program since 2008, you know, I would say a majority of the ones that have lost their accounts, it unravels in a period of a week or two. You know, they could be trading for years, months, grinding it out. And then when things unravel, they unravel. So have one go-to setup, one slump buster, one old faithful, you know, old Jenny with the peg leg. That's the one, right? That's the one that'll kind of get you out of trouble. And if you can do that consistently, then you'll end drawdowns very quickly and go about it. I'm not a big believer in like people taking, especially new traders, taking like time off from trading because they're not trading well. Like I see some students that they lose for a couple of days, I'm taking the week off. Lose, come back, lose for a couple of days, I'm taking the week off. You know, I got to clear my head. It's like you don't get vacation days because you fucked up. And that's not how it works. Like,
and you miss opportunities.
Yeah. You need the screen time, and you can't reward yourself with the day off at the beach to clear your head because you're not trading well. I mean, that's some new age stuff right there, but I don't think that's going to work. The best thing to do is just lower the risk to almost where it doesn't hurt, and then find a slump buster trade, and you're going to be in for a good one. And if you just keep doing the one setup that you're good at, you know, you'll break your slump very, very fast, you know. And of course, this is the main thing because most of us don't do them all the time. when you're in a slump, use hard stops. Even when you're day trading, don't worry about market makers or anything like that, or liquidity things. Just use the hard stops to prevent the catastrophe. Let's take a look at Paul. Some people got some tickers
Sure.
that they wanted to throw. I got a handful of tickers. I'm gonna give you back the screen here. Hold on here.
All right.
Boom, boom,
And these
boom.
are.
Hold on. I got this thing. Whoop, 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 whoop. Yep, you're back on the screen. Go for it. I've got a handful of tickers here. Somebody said a GNRC and FLNG.
Okay, GNRC. So the first thing I always like to do, and I'm not that familiar with this stock, first thing I'll look at is what industry is it in. Even though we're stock specific, the fact that I know it's an industrials are moving, that's a good thing. And if I pull this thing out, even if we're not trading the bigger pattern, it's nice to know where it is in the cycle of that pattern. Mm-hmm. And we can see here, this was essentially in this huge post-pandemic trend, downtrend, bottomed out. That downtrend is over, and this is a fantastic looking kind of bottoming formation here now. And knowing that where it is in the context of that bigger kind of time frame, now we can look at it and say, if it breaks this range here, this thing could really fly because it's breaking that big bottom formation here. So I actually really love this stock right now. And I'm a little surprised this wasn't on my radar. But even now, you could enter. When's earnings? Earnings are coming up, so it's a little risky because you could have to deal with a gap down. But maybe after earnings, if it's still around this level, entering here around 162, maybe putting a 5 or 6 point stop, and there's a range up here around 180. So you could risk about 5 points to make 20 or 30 points there. So I really like this one.
Hot.
What was the other one?
Oh, somebody mentioned, can you expand your TC2000 screen? Because you got like half of it is a website.
How's that?
Buenos.
Okay. What was the other ticker?
FLNG.
All right. Yeah, I honestly don't see much here with this one in terms of what I would trade. Maybe someone else has a different setup, but this is kind of really a nothing burger right now. It's been in this downtrend. Every bounce has failed right around the 200-day moving average. So that's if you really want to trade this stock, probably nothing to do right now. It's in a downtrend. You can see the 200-day moving average curling over. Every bounce fails. That's not a good signal, especially if you're looking at the long side. But it does have earnings coming up. If it can break out and break through this downtrend, that might be a good catalyst for it to run. But for now, I probably wouldn't do anything with it.
Good. I got a couple others here. TSM.
Taiwan Semiconductor. We've been watching this one closely. Very similar to the rest of semiconductors. It's been on a huge run, deep pullback. We've seen rotation out of this area. I probably wouldn't do anything yet with it. It's testing the 50-day moving average, and I wouldn't make a prediction here. I would say use an adaptable approach. We could go one way or the other depending on what the stock proves to us. Here, it's at one of these inflection points where if it shows strength here, bouncing off the 50-day moving average, if it remounts the 9 and pulls back into this gap, that's a very strong signal, and we can go long. So I would say our long signal is here above 175. But if it's testing this 50-day moving average and then fails, that's probably a short signal here. So if it starts to dip here, maybe to around 166, 165, we could actually short it, and there's a lot of room to the downside here. So this is kind of an either or. No prediction here. If it clears this range, we can go long. If it kind of breaks down here, we can go short.
Nice. And I got a couple more here. What do you think of ARM?
ARM. This was a high flyer here in semiconductors. Recent IPO. Flying. This one's showing a little relative strength to some of the other semiconductors here, where it's already remounted the 9 EMA. Very strong move today. I don't know if there was any news that caused it to pop here. But I actually like this one. Whereas Taiwan Semiconductor, we were saying it's kind of an inflection point, has to prove to us. it looks like ARM is already proving it to us. So I think you have a low risk setup here. Even if you fail, you're not going to lose very much. Like enter here at 171, maybe place a stop with 3 or 4 points. And then, if you hit on this thing, you could hit really big. The top of the range is about 17 points away. So risk 3 or 4 points to make potentially 17 here or more if it breaks that range.
Okay. Got it. And we got somebody had mentioned Serve. Miss Burrow, by the way, Serve is probably a pump and dump stock. I believe this was on the OTC just a little bit ago, but we'll take a look for it. Usually those ones are pump and dumps, but SCRV.
I've never heard of this stock. Yeah, this isn't something. It's probably not something we'd want to touch here as swing traders, where you're worried about holding overnight. And I would say if you are going to hold something like this, you want to use small position sizing, where if there's any monkey business, you won't lose too much. But assuming you want to trade it, I would watch this range very closely here. It popped here. What was interesting is it filled the gap and showed a lot of strength when it filled the gap. That's usually a very good. That's usually a very good signal when you get one of these that runs up and bounces at that gap fill. That's a good signal. I think if I was going to enter it, and let's say I was entering here, I would have my stop right under that gap range here, that old gap range.
And I got one more, BBAR.
All right, so a really strong trender. We actually talked about this today, regional banks. First, let's start with financials. If we look at XLF, you can see financials are really strong. It's been led by the big banks, the JP Morgans, the Goldman Sachs, and so on. But we're starting to see, kind of like with the rest of the market, we're starting to see the smaller stuff start to move. So today, we had Zion breaking out on earnings, and that's a regional bank. So I think we're seeing potential for regional banks to really start to move. And what was that ticker again?
BBAR.
BBAR. So the starting point is I really do like this area, regional banks. We're starting to investigate this area closely. And we can see, again, been very strong 2024, has had a nice pullback, kind of working some of that off. This was the last kind of supply resistance zone here. So it pulled back to that level and is showing strength at that level, which is a good sign. If you wanted to play it safe, I would wait for it to get back up over the 50-day moving average, and I think it'd be in a very strong trend. That being said, go ahead.
On like regional banks, for example, something like this, or some of the other ones, the ATRs on regional banks are typically like 1 to 2%, give or take. Like if you're Huntington Bank or whatever it might be, but the 3X ETF for regional banks, which actually has liquidity, it does a couple million shares a day. It has a 9% ATR. So when you see that, if you have a hot, do you just go straight to the ETF? Like if they're all
when there's an ETF doing that, especially when there is a setup that's related to the index itself, that has a lot of potential for gain. A lot of times that you're not going to beat that leverage ETF. So we talked earlier today about the fact that we were in that industrials ETF DUSL. And part of that is because if industrials start to move, hardly anything's going to beat DUSL. I do that with housing a lot. The leveraged ETF is NAIL. And when housing really starts to move, hardly any of the housing stocks are going to be able to beat NAIL. And you can see right now, since the bottom, NAIL has moved from 83 to 137. So that's over a 50% move in 2 or 3 weeks. The stocks aren't going to beat that. And so same goes for regional banks. And the other thing it provides you, especially during earnings season, is some safety in the sense that you never know, especially with regional banks. Sometimes some crazy news comes out with these regional banks and they'll gap down big. Whereas if you're in the regional bank ETF, that gives you a little safety, but still the volatility because you have that leveraged ETF.
Nice. Yeah, I was wondering that too, because I was like, man, banks are really slow sometimes, but that DPST's got, was 10% a day.
Oh, right. Same goes with if you're looking to, sometimes it's tough to trade like the JP Morgans and the Goldman Sachs, right? Because they don't, even though they have been moving fast lately, sometimes they don't. But you can take something like FAS, the leverage ETF, and it'll move much faster as well.
Nice. Well, I think that's it for this week, guys. We got a couple more tickers here. GE. And I actually like GE. I was day trading this for a hot second today.
Okay. I wasn't even paying attention to GE. I'm assuming this was earnings.
Yeah, today was earnings.
So just going by the setup, obviously a fantastic setup here. So anytime you have an earnings breakout over a range that has developed over a long period of time, that's a very good signal that another trend might emerge. So basically, you had this huge trend from November to about April. And, GE is very tied to the Fed. November is when Powell had made some comments about rate cuts, and the market ramped and GE ramped. April was when they slowed down. You can see essentially it consolidated this huge gain for months here. And now you have that breakout. So I think this is a very strong stock to be watching. The question is, do you just want to enter here at 172, which you could definitely do, but you might have to wait for some churn, especially with something like GE, which doesn't always pop right away. But I would probably wait to see if it pulls back and you can get in a little better price. Maybe if it pulled back to like the bottom of the range here around 167, 168.
Nice.
But nice looking stock.
Good. Guys, any last words on earnings season? Can you, before you leave for the last statement, what's your routine on in the morning on looking up stocks that have earnings breakouts? Like what tools do you use? What do you look for? Like you wake up, it's earnings season. Where do you go?
A couple of things. First, we've got a list of momentum stocks we're watching, and we always know what stocks have earnings the coming day. So, the evening before, let me actually pull this up here. I'll take my main watch list. Let me just pull up our main watch list here. Here's the alpha list. And I know today, here we've got, this was in the morning with Spotify, LMT, HCA, whatnot. I know what stocks on my momentum list have earnings, so I'm tracking every one of those, whether they break out or not.
Sure.
After that, obviously there's a universe of stocks that we're not tracking that come out of nowhere on earnings for potential breakouts. So every morning pre-market, like probably you're doing as a day trader, looking for the stocks that are breaking out, right? As swing as well, we're looking for those stocks that are breaking out. Especially stocks that are in kind of these ranges or identified patterns that are breaking out of those ranges. So like we saw with GE here. So tracking all of those stocks, and then we put them in a watch list. So here's my third quarter list starting. And right now we don't have very many. Earnings season has just started. We've got 8 stocks right now. In a couple of weeks, this thing's going to be over 100 stocks. But as they start to break out, we start adding them to the list. So today we added Spotify, and obviously very nice breakout here over the range. So we're watching this very closely for a potential setup to trade now. So we have these earnings-based setups, and then we have about 10 or 11 or earnings-based stocks. Then we have about 10 or 11 different setups we watch for related to the earnings. So I'm going to be watching Spotify every day now to see if one of those setups starts to develop for a potential trade.
Nice. Well, guys, for those of you guys that don't know, Paul, he's my mentor. He taught me many, many years ago, over 15 years ago now. Paul, how do people find you, get involved with you? Obviously, you're at Bulls on Wall Street, but what do you got going on in your portion of the world of Bulls on Wall Street?
Well, they can go over to Bulls on Wall Street, go to the swing trader area, and obviously there's a swing trader service there. If anybody wants a couple of the past video reports, I can send those out to them. So just shoot me a message. I still have that old school AOL email, so singjd1@aol.com. Just shoot me a message. I'll send you a few of the past reports. Of course, we have the chat room. You can message me on Discord, Twitter as well. But a lot of ways to get a hold of me. But definitely, if they want to get one of the last few reports, singjd1@aol.com.
Cool. Paul, I love you, man. Let's go do this.
These are fun. I love doing these.
I know. We got one more month before football season
Yeah.
starts. What
All
do
right.
we talk about?
Yeah, I've got a draft this evening. So we'll see how that plays out.
Good luck.
I get as many 49ers players as I can. That's usually a good strategy.
I know. I'm a homer, so I always do that.
Well, Detroit's got a lot of good players too.
Yeah, both teams are stacked this year across the board. Well, have fun at your draft,
All
brother.
All right. Talk soon.
Hey, later, bros and non-bros. You guys all have a good evening. I'll see everybody in the mañana. Adios, muchachos. It's a buenos. It's a dia.